Hello, everyone. My name is Niki Ariyasinghe. I lead partnerships at Chainlink Labs. Pleasure to be here with you all. We're privileged to have these on this panel, amazing luminaries of the field. So I'd like to do some introductions quickly. Firstly, introducing Sandeep Nailwal, co-founder of Polygon, joining us from Dubai virtually. Many of you may know, Polygon is really the scaling solution on top of Ethereum. Michael Kong, CEO of Fantom Foundation, the Fantom blockchain, is one of the leading alt L1s out there. As of this morning, they were number 6 on the DeFi Llama TVL charts. And also inviting Gwendolyn Regina. So Gwendolyn's joining us from BNB Chain, which until recently was known as Binance Smart Chain, which is part of the Binance group. And she has the enviable task of figuring out how to allocate $1 billion to grow the Binance ecosystem, which even by, I think, crypto standards is a pretty amazing amount of capital to deploy. So let's jump in. First question, Sandeep, over to you. Let's take our gaze back a couple of years. We're now almost 2 years progressed from the great DeFi summer of 2020. Now looking back, and you've been through this process over a number of years, what's the thing that has surprised you most about how DeFi has evolved and how it has become what it is in such a short period of time? Oh. Sandeep, I think you're muted. Thank you.
Yeah. So I'm thinking like what is the thing that has surprised me the most? I would say that initially when the DeFi summer came just after the the COVID crash of March 2020, the thing that surprised I think everyone, that the whole DeFi summer took everyone by storm. Like not people were not expecting that one particular industry within the overall blockchain space will grow that rapidly. But I think in the hindsight, I always fondly remember that whenever I used to go to hackathons before March 2020, all the like around 70 to 80% of projects in hackathons were trying to do something or the other in DeFi. The similar kind of thing that happened when NFTs, NFTs came along in 2021. That time, like everybody was building, NFTs. And now when I go to, hackathons, I see slowly DAO and DAO related tooling creeping up. So this gives me a feeling that, eventually the DAOs are going to be there. There's going to be a DAO summer kind of thing. But yeah, like in terms of like what surprised me, I would say that the sudden emerge of DeFi and then the number of people, the kind of attention it brought into blockchain back in 2020, mid 2020 was the most surprising thing for me.
Thanks, Sandeep. And Michael, over to you. I mean, so we're at 212 billion in terms of total value locked. Again, what's changed for you over the last 2 years? What surprised you the most?
Yeah, thanks everyone, and thanks Niki for hosting the panel and inviting me on board. I really appreciate it. I agree a lot with what Sandeep said. I mean, I think the most surprising thing to me is like how quickly it grew. I mean, like it kind of feels like to me and maybe to like many others that like DeFi has been around for like a long time, but it actually hasn't. It's been around for about 2 years. So first it began with like swaps, like these dexes like Uniswap and SushiSwap and others, and then later emerged into like lending and borrowing protocols, and then like automatic market makers that sit on top of it, and now like all of these like different like instruments, like quite complicated instruments, and like the mathematics behind them. But it's grown like tremendously. I mean, as you mentioned, it's now like what is it, like over 200 billion, and about 2 years ago it was like 0. And so it's just amazing that it grew so fast, and I already feel like the pace of like change and like innovation and like how fast things are being developed in blockchains just like keeps accelerating. And now we're seeing kind of the same story, I think, for like NFTs, and what kind of makes me like very bullish overall for cryptos in the long run is that I think it's going to be as big, if not bigger, than like what the internet is today, because back in I think 2017, 2018, the only thing that blockchains really had to show for were kind of like ICOs, right? And that kind of like ran out of steam because it wasn't sustainable like business model. But now you are seeing sustainable business models via like DeFi, via NFTs, via games, where now people have control over like the digital assets for the first time ever, instead of a third party that can just take it away from you whenever they want. So that's what's like really surprised me the most. And it just feels like things are getting faster and faster and faster.
Thanks, Michael. And Gwen, I mean, you're bringing a fresh perspective to all of this. You joined BNB Chain last year from Meta, formerly Facebook, but you're getting this eagle-eye view over the entire sector. What surprised you the most coming from the Web2 world?
Yeah, thanks everyone for having me. Thanks, Niki, for curating this. Backstory, actually, I first saw Bitcoin in 2010, but didn't get involved in my hands deep in it. So you're absolutely right, Niki, fairly fresh in this crypto world. What has surprised me for the DeFi in such a short time is actually the contrary. So it surprised me that it's grown so fast, but also the same time for last year, DeFi continued to really, get to 200 over billion TVL. But at the same time, when you look at the retail world, the narrative wasn't DeFi. In the retail world, the narrative was NFTs. So it's almost as if like, wow, I kind of wish that prominence of DeFi carried way more into the retail space. So that's kind of what I would see.
Excellent. Thanks, Gwen. Appreciate that. And so let's change tact a little bit now. So we've looked at the past. So what is the direction of DeFi as you see it today? So, we're at 212 billion. What do you think, Gwen, to kick us off, will drive a step change in DeFi TVL or just overall growth of the sector, say, for the next 2 years? Some options to consider. Option A, product innovation. Option B, user experience. It's come up a lot. Option C, new sources of capital inflows, mass market retail or institutional, for example. Or option D, other. What would you like to choose?
Is this a multiple choice question only? and then other, Niki, is when you elaborate, right? Like that's a full text, right? Paragraph, right? Step change. Okay, so let me kind of think it through, right? So institutional money has already started coming in. So I don't think that's a step change. In the last Q4 to now over the last 3 to 4 months or so, we've seen like a 3x increase in institutions mentioning Bitcoin and SEC Form 13F filings, which is interesting because you're talking about asset managers that manage more than 100 million in AUM for their clients. So the money is already coming in. I think step change perspective, I would say it's targeting the retail users. So one step change, I think, is if more major banks offer crypto to retail users. That's one. Can I choose two, Niki? Offer multiple check boxes instead of choose one, right? Instead of the bullet boxes. So second, I would say is wallets. Easy to use wallets for the Web3, for the retail user. Wallets now is such a mess, right? I mean, for us, it's okay, we can manage it. But even then, even if we're in this space, we still get scammed sometimes. So I would say the second one is wallet user friendliness.
That's great to hear. Thanks, Gwen. And Michael, what are your thoughts on this from a Fantom Foundation perspective?
I kind of think my cop-out answer is that I kind of think it's a bit about all of the above, right? So in terms of like capital inflows, I think a lot of people out there still think might be thinking that blockchains have gone so much in value, it must be like mainstream now. And in reality, that's not the case. If you look at like all of the metrics, if you look at like how many users use blockchains, if you look at like the total value locked, if you look at all the activity that happens, it's still like a very, very small segment of basically the total economy or what people use in general. And it's nowhere near as big as like the internet is. And so I think in terms of like capital inflows, I think what a lot of people are waiting for what I've been hearing, is a more regulatory certainty, particularly in the US, because they're not really sure, like how DeFi fits into the regulatory framework. It's quite new. It's only like 2 years old. People are trying to catch up and understand, first of all, like what is blockchain and what are wallets and what is DeFi and that sort of thing. So I think once we get that sort of like regulatory clarity, which I think would be, actually like quite positive, then I think that's when you're going to see like a lot more inflows. And the second part of it is, I'll just mention, like we need better like wallet interfaces. And I think over time that will like people will kind of like get used to like how MetaMask works or how these different kind of wallets works, because if you kind of think about like when you first started using a computer, you might have been very young, you might have been a bit older, but when you first use a computer, you're probably like, whoa, what's going on, right? Like how do you type on the keypad? What is an internet browser? This is all like kind of like weird stuff, right? And I feel like we're kind of like in that environment where like, for us, like in the room here and on the call, to us it's kind of like a bit intuitive because we're so used to like playing with all these like wallets and tools. But I think for the vast majority of people out there, it's all really new for them. So, I think over time, you're going to see like better integrations, better user face improvements, which I think we've already started to see. But at the same time, I think you're going to see a lot more people kind of like learn how to use wallets a bit more, just like they learn internet browsers. And so I think naturally over time, you'll get a lot more adoption. And that's what's really going to, lead to a lot more growth in DeFi. And of course, there are going to be like new products, exciting products coming out in DeFi, in like the sort of things that you see in traditional finance that you don't really see like right now in DeFi. I think those can be coded in, and those rules can be coded into a smart contract, which kind of acts as your middleman. Instead of there being like a third party broker or firm, instead you have the smart contract that kind of interacts between both sides of the users on either side of a trade.
Sandeep, I mean, Polygon's famous for having quite a unique go-to-market strategy. You have this kind of plethora of blockchains approach, and Polygon is obviously heavily involved in a number of different parts of the crypto sector. What's your view on this in terms of what's going to drive a step change in particularly DeFi TVL?
Yeah, so I think I think the other guests already mentioned stuff related to the other options that you mentioned. I would actually go to the option D, which is the others in my mind, because what I see in DeFi is that the money that is actually flowing in DeFi is actually right now has reached a plateau for quite some time. In the last 1 year, we are not seeing much of net inflows into DeFi because there are like the only way that we are driving the user adoption is new protocols coming in and distributing their tokens. And if you see even let's say with lending borrowing protocols, for example, we see the organic borrowing activity is very small, whereas the lending activity, because they are getting some free tokens, is on the higher side. So there are very few protocols which are actually being able to generate any real organic APYs. I'm seeing I've started talking to some people who are like looking to do structured products. I think that might drive some organic APY within the system. But otherwise, most of the APY, even I would this is a blockchain pattern, but many of the times we say that most of the API that is being driven in the DeFi space is more because of those Ponzi-nomics that they say, right? So, new protocol coming in, new money being distributed every time there is a speculative asset. So the thing that can bring in, I feel, if you see the real world, the largest amount of activity in the real world, let's say in the lending borrowing world itself, right, which is kind of like the bedrocks of these money markets, is actually driven by under collateralized lending, right? If I have $1 million in ETH, then I can go and take a loan of 500K or 600, 700K in DeFi, right? So if I already have $1 million in DeFi, generally the only use case for that is institutional investors who have $1 million of ETH. They want to long ETH, so that's why they put ETH as collateral and take out some capital to do. That's the only organic borrowing activity that is happening. I feel one of the key parts is, as I think Michael also mentioned, regulatory clarity is required on that. The second part is, I would say, is like identity and Sybil resistance and credit scores on somehow on chain, right? And that is something that we are also closely working on having a zero knowledge based identity systems and credit solutions and all that, so that you can you can slowly reach that point where you can have under collateralized lending and free flowing lending that you have in the real world, and that will actually fuel the real borrowing, or the real kind of bedrock use cases in the money markets.
Thanks, Sandeep. I mean, I think there's a lot to unpack there, but I think for the audience and those listening in online, if you learnt one thing from this talk, the term Ponzinomics. But let's dig a little bit deeper into the institutional side. I think each of you has mentioned this in slightly different ways. But if everyone, I think, is expecting this influx of institutional capital. Sandeep, it was great to hear about you looking at structured products. I think that's one angle to explore as well. But I want to put each of you on the spot and actually just ask, when do you think this avalanche of institutional capital, in your personal views, is actually going to appear? And what are the top things that need to be solved for in order for that to occur? I think, again, you've all mentioned KYC as an example. I've often heard privacy. There's a number of, I assume, institutional wallets, to Gwen's point. But starting with Sandeep, and when do you think this avalanche of capital is going to come through, and what are the top things that need to be solved for?
For the institutions, bringing in money into DeFi, specifically to DeFi, like crypto institutional capital is already sitting on the sidelines, and I think that when the moment markets actually signal to the institutional investors, they should come in. But when they'll come into DeFi, if you go to most of the protocols, not the new protocols which are coming up with the new, sort of as Ponzinomic, as I said, it's the APYs and everything is very hard or very low for institutional capital to take that kind of risk, because they still consider crypto holding custody of assets in crypto, smart contracts custody slightly risky, and then you need to have that kind of APYs or returns that can be generated on DeFi. And the vantage point I am looking at into the industry, I'm not seeing much of the retail activity which can actually, or retail demand. Like I'm talking about the demand side. The retail demand side, I'm not seeing that much which can drive that kind of returns for this thing. So we need to, as a DeFi overall ecosystem, we need to work on how we can increase this demand. That demand, like user experience, custody. I think custody solutions there are plenty now, and it's perfectly fine for them, for the institutional capital. Privacy, maybe some part of the privacy might be required, but overall I think when the institutions are anyways deploying the capital, they are very clear that okay, and they have to announce due to regulatory requirements and all that. So I think that's not much of an issue for me. I think the demand side from the end users is the most important thing, and again, as I said, that needs to mirror the real world financial ecosystems to be reflected in DeFi, which is, like, as I said, that ID is a very important part for that.
Yeah, no, absolutely.
Yeah.
No, that makes sense.
Okay.
Thank you, Sandeep. Appreciate that. Gwen, your thoughts? I mean, how does BNB Chain look at this?
I appreciate that Sandeep talk about demand, right? Because in a sense, is lending and borrowing as two big giant pillars, base pillars of finance slash DeFi, is really a marketplace, essentially, right? So we've talked here about wallets, we've talked about retail users, but I also think that it goes both ways. Marketplaces, they feed into each other, right? So imagine now, and just on one point I mentioned was banks offering crypto. Imagine now if major banks, instead of offering your 0.2% or whatever it is, your interest rates to your savings account for a general retail user, imagine now is somehow they have a special savings account, new savings account, and the rate now is, I don't know, 4%, right? It's low compared to DeFi staking yields, but it's super high for the retail user. But a retail user doesn't need to know that it's coming from the crypto bucket. So I would say that I would love to see kind of, instead of not just demand from the crypto user, but banks creating that demand by them smartly, taking all the AUM, taking all the finance knowledge, bringing some of that into the crypto market from the institutional perspective, and then offer some of the yields back to the crypto user. I think that will be interesting, because then again, more of our friends will be like, oh, okay, there's a new savings account, it's 4%. If they click more, they try to learn more, they'll be like, oh, okay, it's coming from the crypto market, Bitcoin, Ethereum, and BNB, hopefully they hear about it as well. That's all they need to know. And I think that will be one, using the term again, another step change to allow this to be more for mass adoption.
Thanks, Gwen. I think, a lot to unpack there as well, I think, but some interesting opportunities there, I think, on the customer side. And I think we are seeing that kind of early convergence, like you mentioned, from a banking perspective, at least here in Australia. Michael, just close us out here, just in terms of your initial thoughts. I've got one other question I wanted to pose to you all as well. Yeah. But just in terms of institutional, how does Fantom approach this? What are your thoughts?
Yeah, I mean, you talk about like the avalanche of money coming in. I think we already are starting to see some of it. Like I remember reading, I think a couple months ago in Australia, that REST superannuation, this big like industry super fund, for retailers and workers in like retail and supermarkets had already started to put at least a little bit of their capital into like crypto assets. And I think it was Bitcoin and Ethereum. So not yet DeFi, but still like taking like, I guess like the first steps into like into the crypto world, so to speak. And we've seen some like similar activities with like pension funds and other institutions, particularly in the US, starting to come in despite like the regulatory uncertainty. But I think once the regulatory uncertainty is like clarified, which could be a while though, could be like a year or two, I think we'll start to see a lot more like money come in, because I think people will be more comfortable with it, and it will also give people the opportunity, more time to kind of understand really what DeFi is, because as I've said before, DeFi is only like 2 years old. And I think there are some like applications. There's one in Australia, I can't remember the name, but like someone I know is building an application that basically, people can deposit their money into like a bank account, and then basically that money is used to kind of like what we call like yield farming, or basically be deployed into a DeFi system, and there's like different levels of risk that you can take into account, and you can earn rewards right now that are like far higher than 0.1% that you can earn in your bank account, because we had the lowest like interest rates ever in history in Australia, and virtually like everywhere else worldwide, almost everywhere else worldwide, which is absolutely crazy when you think about it. And so those sorts of applications will help people kind of like on board, like from the general like world, from the non-crypto world into the crypto world. So I mean that helps. In terms of like where a lot of the APY comes from, I think Sandeep is definitely correct. A lot of it is via these like new token emissions that drives like APYs very, very high. But I think a lot of people like have put their money into DeFi with different like levels of risk profile. So for example, like on the Curve protocol, which is this very, very big protocol on Ethereum and a few other chains as well, there's like billions of dollars in there, and there's a lot of money. If you go to the website and you look at where people have deployed the money, people have deployed the money in some pools that don't actually have token emissions, but still generate like pretty solid APYs of at least like a few percent, much higher than what you get in a bank, because people are lending and borrowing and using those funds in the pool, in order to do whatever activity they're looking to do in DeFi. So if people were just chasing high APYs, then you wouldn't see money in these pools. But people are chasing safer quote unquote like investments that are kind of like they just put their money in there and kind of just like sit it out over time. And other people are a bit more crazy with the money, a bit more high risk, and kind of ape in, as we like to say, into like all these like different protocols. So you get like all sorts of people in the market, just like you do in traditional finance. You get people who take super a lot of risk in trading penny stocks, etc., and you have other people who just like put the money into ETFs or bonds or bank accounts and stuff like that.
It's an interesting, I think, convergence absolutely happening in terms of both banking, APYs, UX, and regulation as well. So thank you all. Really appreciate your insights. Unfortunately, we're out of time, but genuinely, thank you so much for making the time. I realize everyone's joining in from various parts of the world, but really enjoyed this conversation. I think the audience did too, but thank you so much for joining. And good afternoon, good morning, and good evening to each of you. Thank you.
Thank you so much. Yeah.